Hey, here with another update. This is the update for December 22nd. Right, so overall good day with being up $76. And in terms of positions doing poorly, not a whole lot going on, but not a whole lot going on for even in the positives either. But the biggest thing that I ended up having to do was Alcoa, where I had to roll up the position from I put that as lower up to the 56 and now made it into a straddle. So let's see, going to the activities page, I already have this filtered to Alcoa. When I started this trade, it was on December 10th, and it was a Strangle where I sold the 43 put and the 56 call. Now let's look at this tiny chart over here on December 10th. Right, the stock was around $48 and selling at 43 and a 56 kind of sort of made sense. Collected 158. So then within 10-11 days by December 21st, a couple of days ago, I closed out the 43 because the stock had moved up. And let's see, December 21st, where's the price? By December 21st, it was almost at 60, or it had already breached through the 56 call we had. Bought this back and sold. Bought the 43 put back, reduced some deltas, trying to remove some of the directional risk. Moved up to the 52. Did that in the afternoon. And then the following day itself, stock moved up even more. So then I had to buy back the 52 and sell the 56. So now I have the, even though I started at 56 call and 43 put, which had a gap of about $13 where it could expire by Jan 7th. Stock has moved so much that now I've brought it up from a 43 put all the way to a 56 put, so it's a straddle. And I think I've collected all together, let's say let's call this 160, 260, and another 70 maybe after reducing this. 260 plus, so around, let's call it 330, 325. So I have 56 straddle, which started off as a pretty wide strangle. Yeah, going to the portfolio, we can see I've collected what did I say, 330. Now the positions, right, both of them together is marking for about $600. So this is going to require a lot of managing, and this is not going to be easy to get out from. It has a pretty decent, a pretty high theta. What's probably going to happen is what I will have to do is either today or next week, depending on how the stock moves, we'll basically roll this out. I would buy back the 56 chattel for the January 7th expiration and move to January 14th. I mean, right now, can't really tell if this is going to be the true credit, but still going to be kind of high depending on how the stock moves today. Right, stock is around 59, a bit above 59. And what I can do is to even remove some of the direction risk would be, so when I move buy this back on Jan 7th, and when I move it to Jan, or from the Jan 7th expiration to Jan 14th expiration, I could move this straddle up. Let's see what would that look like. Right, so if I move it up and get closer to the actual stock price, the amount of credit I collect would be less, but then I would be removing some of the deltas, taking some risk off, right? I'm more scared of risk to the upside because that's when the margin or buying power starts going up dramatically. So probably want to move it up too, depending on how the stock moves in the next couple of days, and try to remove some of the risk. So if I'm to look at what the deltas look like right now, this is 72 delta call, 28 delta put. By moving up, it'll become 60 call and a 40 delta put. And overall, by just doing that, I would be collecting or increasing my delta exposure by 23. Is that delta exposure? It is delta exposure. Yeah, makes sense. I'm going less short and I'm going more long. So it'd be 12 plus 12, 24, about 24. Yeah, okay. And this way I'll be taking away some risk. But yep, this position started off pretty well. And Alcoa has been a pretty decent position so far. Right, previous trades I've made have actually turned out profitable. But this is going to require some handholding. And one of the risks I see in the near future would be, yes, I can move from the Jan 7th to Jan 14th expiration. But then when I want to go to Jan 21st, I'll have to worry about earnings because during earnings you can even see the implied volatility is higher. And at that point, the stock would move dramatically. I'm not really sure how I would be able to get out for even a scratch before this time frame. Or maybe even carry this through or just take a loss. Haven't decided. At the moment, just trying to play catch up to some extent. But this was the, let's say, big management thing I had to do yesterday. Now it's just a wait and see game. In terms of other positions that I want to remove, I would like to remove UAL. And if NVIDIA has a good day, I'll probably remove this put spread. All right, that's about it.